friends, this is the Cryptonian. Welcome back to my channel. In this video, I'm taking a look at Bitcoin, but not on a daily or a 4-hour period. I'm taking a look at Bitcoin on a weekly period. And the reason is because I want to share some information with you on a larger scale, the larger picture. The reason why I'm doing that is to show you that there are identifiable characteristics within the bear market. Now, we're just coming out of a bear market, and I want to show you that there are specific characteristics to look for, specific points that change the large picture, okay? Certain points that occur in a bear market that show you where you are in the greater cycle and what to expect possibly. Again, remember, nothing is exactly the same. Each bear market is a little bit different, but by looking at these certain characteristics, we can see that there are some similarities. So we're going to start in 2014. We're starting at the top of the cycle. Now, we entered the bear market after that top. We came down and we had our actually, this is what's called an ABC correction. The first leg down is the A leg. We then have a partial recovery, and it's pretty much of a fake out, and this is the B wave. And then we have a continuation down, that's the C wave. So after that, we bottom out, and then we go into the next cycle. Okay. So whenever we broke down in 2014, we came down. This was the first wave. This was the A wave. That created an area where we place a white line. We place this horizontal line, and I'll explain to you why. We then went up, and then we had the last leg down, which is the C wave. The C wave is a long, protracted, very boring, very painful move down. Okay? So this is one of the most painful and one of the most boring parts of the market. Now you can see that we broke down here below this white line, and then we tried to recover. We actually went above it, and then we finally capitulated, and we had a confirmation of the breakdown. That occurred right here. Then we went into the bottom. This would be the area where you would accumulate. This would be the area where you would start dollar cost averaging, buying the bottom. Large institutions may actually start higher here and buy and scale in as they go down. And the reason is because they need liquidity. Now, after we see the bottom, we then go into the preliminary phase of the next bull market. This is a transitionary phase, basically. This is the beginning of the next cycle, the next trend. When we break above the white line, this signals that we are then into the transitionary phase, and we are into the beginning, very early stages of the next cycle, bull market cycle going up. So we have the breakdown here, and then we have the breakout above that line. Now here in 2015, you can see we had a hard time struggling at this level, and we had a hard time struggling at this level before we broke down as well. So that being said, it took some time for us to clear this white line. After we cleared the white line, we then went up to a retracement level. It's called the golden pocket for the bears, and that's because you're coming out of a bear market into a bull market, and you have to clear this level to confirm that you're on your way to breaking out up into new highs and into the very strong next phase of the bull market. Now you can see what happened. What happened here was we were rejected from this area. This area typically is measured from the top of the market to the bottom of the market. This is the bear market, of course. From the last top of the cycle to the bottom of the cycle, that gives you Fibonacci ratios. These Fibonacci ratios show you where the golden pocket is for the bears. Typically, it's the 0.618 area. This 0.618 area then will show you where the rejection takes place. Now here, this 618 area is marked off by a red box. After we had the price hit the Fibonacci 618 area, we were stiffly rejected. This is profit taking. Now this does not look like a lot, but we actually came down about 40%. That being said, you can see that we came down almost to our white line. Now the reason is, now you can notice that I am using yellow arrows to show this area. And the reason is because the first arrow is red because we're entering the bear market, the last phase. The second arrow breaking above the white line is green because we're entering a bull phase, a bullish phase of the next cycle, the bull market. These are yellow arrows because this is a correction in a bull market. This is still a bull market. Now you can see here as we broke out above the white line, we did test this white line and confirm it as support. And then after we hit our 0.618 Fibonacci level, the golden pocket for the bears, we had a pullback. We had a lot of profit taking and selling. That brought us back to the level of the breakout. This was a confirmation. Now we didn't have to come all the way back to the line because we had a lot of price action here providing support. Now that brings us into the next strong phase of the bull market. We confirmed this area and then we went up. We did have some corrections along the way. These corrections were anywhere from 25 to 30, 40%. And we continued to go higher from there. After we saw the top of the next cycle, we then went into the same identifying characteristics of the bear market. Taking a look at these identifying characteristics of this cycle, we can see that we had the top. We then had the breakdown into the bottom of the market. This is where accumulation would take place. We had the green arrow show that we had a breakout back above the white line, which started the next cycle, the next bull cycle. This is a transitionary phase. Remember, this begins the transitionary phase because it's not straight up from there. From here, we went directly and with a lot of strength into that golden pocket for the bears. We did reach it, but we sold off very, very quickly. We rose very strong and very quickly, and then we had a protracted selling off here in this area. Now look here again, we then tested the white line. However, this was in 2020, and in 2020 we had this global issue, and so I'm not going to name this issue because of the YouTube algorithm, but this was the global crisis that we had, and I'm sure you know what I'm talking about. For this reason, I think this is why we actually came down much lower than we did the previous cycle. We actually came down beyond the white line, but then it was quickly purchased. Okay. After that, we then went above the white line again, and then we rose with a lot of strength. We then broke through the golden pocket for the bears, which was prior resistance, and then that pushed us into the top of the next cycle. Okay. This top of the next cycle is 2021. Now you can see the characteristics that we have identified in the prior two cycles. So what do you think is going to happen? What do you think is going to happen? Well, most likely we will see the same characteristics, and that's exactly what we saw. We had the cycle top here. We had the cycle top here. We then went into a strong ABC correction, A, B, and then C, the C leg all the way down. Now the B wave, the beginning of the B wave, end of the A wave, created the area for the white line. Once we broke that white line on the C leg down, that put us into the area. Let me move this up a little bit. That put us into the area of the bottom. This is where a lot of purchasing took place. Okay. Now, then, just recently, not very long ago, okay, in 2023, at the beginning of the year, we started moving back up towards that white line. Now, technically, this is the beginning of the first phase of the bull market. However, it's transitionary, right? This is not the strong up, up, and always up with only a few corrections along the way to the top. Remember, we have to test the golden pocket for the bears. So we went up and we had a hard time with that white line. We were rejected a couple times. After we were rejected a few times, I'm sure you remember this. This occurred not very long ago. We then broke through. We broke through this white line, and this was only last week. This last week that we confirmed this breakout of this candle here. Okay. Now from here, we learned that from the last two cycles, we should move up into the bear golden pocket. The bear golden pocket is approximately the Fibonacci 0.618 is approximately $47,000, 47,000.6, right? 47,000 and a half. Now the 0.5 Fibonacci is at 41,500. So according to the previous two cycles, now remember Bitcoin is very young and we don't have a lot of information, but according to those two cycles, we should continue. Of course, it doesn't go straight up in a straight line. We have, corrections along the way. We have strong weeks where we push up. We have weak weeks where we have some downtrend action. However, we should see anywhere from 41,500 to 47,500, about 41 to 47,000. And this is shown by this yellow line that I placed on the chart. If we do follow the prior two cycles, we can expect something like this yellow line. Now again, this is not supposed to be a perfect representation. This is just an idea of what can or could occur. Now we see that the yellow line moves into the golden pocket for the bears, the 0.618 Fibonacci, at about $41,000 to $47,000. After that, we expect a rejection. That rejection would bring us back down, remember, to the white line. This white line is roughly, let's take a look, 31,830. So roughly $31,000 to $32,000. Now remember, there was a cycle, the last cycle, where we did go below this white line. So it is possible to come below this white line. We have one cycle where we did not, and we have one cycle where we did. Remember, Bitcoin is in a market that it has not seen before. We are in a market where there's macro difficulties. The Fed is tightening and not printing. We are experiencing quantitative easing with the Fed, and so and we're in a high interest rate environment. This puts a restriction on the spendable amount of money, the extra amount of money that investors would have, which limits the amount of money going into the market. So this area of the market is highly variable. Again, we should hit the $41,000 to $47,000 area before we have some type of large correction. That large correction can be anywhere from 30 to 60%. 30% would bring us down to about 29,000. So remember, one cycle we didn't make it to the white line. We were barely above that white line. The other cycle, the last cycle, we went down below that line considerably. So that being said, the 30% is just an average, or not even really an average, it's just a estimate based on what I think could possibly happen. We could possibly come slightly below that white line. That would actually scare the participants, create liquidity for the large players, because they're going to need to buy in here. A lot of your large players will be selling here at the golden pocket for the bears. This is what we've seen in prior cycles. After they sell, they're going to need to buy back in here. Now, if retail is buying above the white line, they need to push retail out of their positions to create liquidity so they can buy those coins that they're selling and buy those up, create their position, and then move higher. So that's why I put this line here at 30%. It could be less, it could be more. We have to wait and see what happens. That being said, that would create liquidity for the large players. And then once that area was bought up by the large players, the institutions, the whales, then we could go higher. And that would be the start and the beginning of a very strong macro trend into the next bull cycle. This is going to be probably this up area, this up cycle, breaking through the prior golden pocket for the bears, probably in 2024. Now, I don't know how long this intermediate transitionary phase will be. It can be a short period of time, it can be a long period of time, depends on if institutions are going to apply downward pressure to keep Bitcoin suppressed so they can build positions. Everyone wants large players. Everyone wants BlackRock, Fidelity, Vanguard. Everyone wants those big players. But what they don't understand is these large players manipulate markets, and they can actually build a position for 1 year or more. So it's very unclear just how long this phase will be. All I can say is that we are more than halfway to the bear pocket, the golden pocket for the bears. We only have a small percentage, well, I wouldn't say small percentage, but we have less than 50% of the way to go. We have about a 30 to 35%. We have about a 30 to 35% increase to go before we hit that major reversal at the bear golden pocket. Now that would, like I say, create, whoops, let's, one moment here, let me get my marker. Okay. Now that's going to create a lot of speculation. Social media is going to be very bearish. They're going to be very fearful. But there's going to be a lot of people buying the dip. Now, what I mean by buying the dip is I will be buying this dip very aggressively. This dip is going to signal the last buying opportunity before we really take off into the bull market in 2024. Now, if institutions keep this cycle suppressed long enough to enter the market for 6 months, 8 months to a year, then this phase is going to be a long period. People will get bored, frustrated. However, it may not be. It may be a very short period of time. We just have to wait and see. But there you go, friends. That is the explanation of the cycles. That is what I am expecting. I'm expecting about 30% to 35% more upside. And then after that, I'm expecting an aggressive dump here. Aggressive selling into this white line. Now, the question is, do we buy now? Is it a good idea to buy now, or is it a good idea to wait? Now, at this point, you probably have felt that you've missed the most of the market, but you have not. Again, we're just getting started. Now, a lot of gains were made from the bottom to the white line. On Bitcoin, this is probably, let's see, this was about, let's see, that was about 100%. However, there's about 166% to the bear golden pocket. All right. So we have about 30-35% more to go until I think that we'll see severe selling and a reversal of the market. And that's going to be a macro reversal. That's going to be a reversal back down to this white line. Now, if you buy here, you're buying close to the white line. If after we hit the reversal at the bearish golden pocket and we start coming back down to retest this white line, then you will already be in position at this white line. Now remember, if the price goes below the white line, you may be in a loss for a relatively short period of time, or maybe up to a year. That loss, if you enter now, could be anywhere from 15 to maybe even 30% of a loss. We just don't know. However, statistically speaking, when we take a look at previous cycles, this is not a bad place to enter the market. And again, if we have a very bullish cycle and the price comes up to the golden pocket, comes back down and doesn't even reach that white line, you will already be in position, and you'll actually probably be in a small profit or break even at this point. And then you could also add to your position here and then ride the wave of profits as it goes higher. So there you have it, friends. I don't want to make the video too long. It's a bit long already, but it's important to explain where we are in the cycle, and it's important to identify what the risk is versus the reward. Now, yes, there is 30%, 35% upside, in my opinion, and this may vary. This is not a hard, concrete number. However, there's a little bit more upside to go. If you're a short-term trader, you could take advantage of that. If you are a long-term trader, then you probably could dollar cost average here, and then as we move up, I would not enter any positions close to the golden pocket, close to this red box. The closer we get, the riskier it is, because when we reverse, you'll be in a loss. So you want to enter as close to the white line as you can. And if we break below the white line, statistically, that's probably a good place to also dollar cost average. If you dollar cost average, you'll get the best average price. And this is the strategy that large corporations use, large institutions, hedge funds, large players, whales, etc. So there you have it, friends. I hope you are understanding the cycles a little bit better. I hope you understand where we are in the cycle, what to expect, a little bit more upside, and then most likely a strong push to the downside and a retest of the white line, maybe even a little bit lower. If we have a lot of buyers, institutions, and the ETFs are approved, then we could have a lot of buying here, and maybe we don't reach the white line. We have to keep in mind that both scenarios are possible. Okay, so it's up to you. This is not investment advice. I just wanted to educate you as to how the cycle could potentially be evolving and how it could play out according to past cycles. Thank you for watching, friends. Please click like, and if you're not subscribed, please consider subscribing to the channel, and if you do, click the bell to get notifications when I release additional videos. Thanks again, friends. I wish you the best of luck, and I invite you to go on this journey with me so we can enjoy this journey of this crypto journey together. Take care.